Let me tell you something. I've been a rich man and I have been a poor man, and I choose rich every fucking time.
Welcome to Market Makers, everybody. Your home for tomorrow's TA today. Often imitate it, never replicate it. Guys, this is the year. I put out a video last week on Thursday. It's kind of like a market update, urgent update, if you will. Non-farm payrolls came out stronger than expected. Unemployment went down. What did the market do? It sold off. But this is the year, like I said in that video and the video before, you really need to understand, in my opinion, the world around you, the market catalyst, the economic catalyst, what's going to drive sentiment, because you have really two types of traders. If you watch TV, most of the people in business news are fundamental traders, right? They're just going to tell you they need to spin a narrative, a yarn, a story to justify why something's trading 50 times earnings, 100 times earnings, 400 times earnings. They don't care about the technicals. Technicals don't work. They just talk about the product pipeline, but you don't understand this company is going to take over the world, right? They have to sell you the sizzle. Technical traders historically will do the opposite. They advocate, don't pay attention to the news. Don't do any of this. Don't look at all this other stuff. It's all FUD. It's all noise. Everything you need to understand is in the charts. But is that true? Let's just take last week for an example. We were trading in a defined trading range, testing support, hitting resistance, right? Non-farm payrolls comes out. Maybe you didn't even know it was coming out. Non-farm payrolls comes out stronger. Unemployment drops. The market sells off. Why did it sell off? Well, a technical trader would tell you, well, obviously we had a head and shoulders pattern. Don't you watch YouTube? There's a lot of 19-year-olds showing a head and shoulders pattern. There's a lot of guys hawking $10,000 education course showing me a head and shoulders pattern. It was obvious it was going to decline, right? Well, flip that coin. What would have happened if non-farm payrolls, a number nobody knew, if non-farm payrolls would have come out weaker and unemployment would have gone up? Again, both these numbers are cooked. We already know that, right? If that would have happened where non-farm went down, unemployment went up, then the market would have rallied. And then some of the posts you saw on X saying, how many times are we going to test support before these idiot bears realize we're going up? They would have all been saying, see, told you, it's all in the charts. All you had to know is we were testing support. So again, both sides of the coin, right? You need to understand everything, in my opinion, to form an educated analysis. And what we're looking at in the market is market segments. I'm looking at the market by quarters. I'm looking for the big swings in the market for the trades, because this is how I want to trade 2025, because this year has a lot of paradoxes that are going to be coming. This year has a lot of catalysts as well that are going to be coming. We have an underlying economy that is extremely fragile, extremely weak. Some sectors have been in recession for a long time. We have all the recession indicators that have triggered, but we've been cooking the books. And Joe Retail in Wall Street doesn't understand what's happening in the market. Wall Street may understand, but they have no motivation to tell you to sit in cash, right? They don't make their all-time high record bonuses that they've had this cycle. They don't make that by you sitting in cash, but the average retail trader doesn't understand what's happening. So you need to understand all of these things. Just in the next few weeks, we have major catalysts coming. We have the CPI on Wednesday. We have the inauguration on the 20th. We have the FOMC on the 29th. And we have BLS job revisions on February 7th. Now, let's just work these out. BLS job revisions. Why is that even significant? Because the last BLS job revision was an all-time high, negative 818,000 jobs added to the economy. Why is that important? Because anytime we had over 500,000 on a revision, we've always had a recession. It's important because in an election year, they were cooking the books. All of these government jobs, or all of these jobs, are government jobs that they've been hiring. And you saw that reflected keeping unemployment low. Meanwhile, grocery prices, embedded inflation's above 26% for everything that you buy. So is the shadow government going to do Trump any favors? Well, That's a debate point. That's something you have to work out as a trader. What's the CPI going to do coming up Wednesday? Is that going to come in hot or is it going to show a decline? Again, for people that don't think it matters what the news is as far as these catalysts, I think it does. CPI comes in as expected or lower, meaning inflation's cooling, meaning the Fed can therefore what? Add cuts back into the year because the market priced out all the cuts till October. What's going to happen? Market's going to rally. Okay. Again, it's a catalyst. I don't care what pattern you have. If you told me for a fact CPI is coming in lower than expected on Wednesday, I don't care if you have a bearish flag pattern. I don't care what pattern you have. I would tell you if you know inflation is coming in lower than expected, the market's going to rally. Okay. Again, understand the variables of what's happening. Same with Trump's inauguration. Will the market view that? Market's closed that day, by the way, on the 20th. But will it view that as a positive thing? Will it give it a reason, part of the story to rally? Because I believe this is the shakeout before the next rally. The next rally is going to take us up to a lower high or a new all-time high. And that's what we're going to discuss in the charts. I just want you guys to be armed with everything because, like I said, lots of conflicting data. We, again, have all the recession triggers that have triggered for this market cycle. But then what's another cycle that we're trading in, right? What are we butting heads with? The decennial cycle. Lee, throw this up. So I use the Dow Jones as a proxy here, guys, for years ending in 5. You're probably wondering, what the hell is a decennial cycle? It's every decade you have a year that ends in 5, right? This decade's 2025. So in a cyclical perspective, how have the returns been in the decennial cycle? Well, let's just start back at 1905. There's no data prior to that for the Dow Jones. The Dow's the oldest index, right? So that's why we're not using the S&P. We want as much data as possible. 1905, Dow was up 38%. 1915, up 83%. 1925, up 30%. 1935, up 38.5%. This is for that 1 year, the decennial cycle year, okay? 1945, up 26%. 55, up almost 21%, 65, up 11%, 75, up 38%, 85, up 27, 28%, 1995, up 33%, 2005, minus 0.61%, 2015, minus 2.23%. So in other words, you have a data set of 12 because 2025, the year ending in 5 is still open, obviously. A data set of 12, 2 of those years ended negative, but only slightly. The rest of the years were positive. And what was that positive average? 28% gain in the decennial cycle. Now, how do you juxtapose that with the fact that we just talked about all the recessions triggered, a new president is in, people worrying about inflation, spike in inflation, trade wars, real wars, tariffs? How do you juxtapose all that? My answer to you is take it quarter by quarter and let's actually see what happens. But I'm highlighting the fact that you need to understand these catalysts because realistically, we can get this massive retracement, we can get a small retracement, and then we can come back up and we can hit a blow off top number, a parabolic number, or we can go to a lower high, guys. I don't know the answer. We don't have any candles for a true bottom yet. We don't have any candles challenging the top. Does it blow right through it? Does it fall back down? We know the key seasonal pivots to pay attention to: spring equinox, fall equinox, because those give us the majority of market tops and bottoms. Spring equinox is coming up March 21st. So on the charts, are we about done with this retracement? We're down about 6% in the S&P futures. Are we about done with this smaller retracement? Come back up, challenge the high, make a new high, or fail below this high, and then come down for a larger 10% retracement, 13% retracement, and then a big rally up? Or are we just going to bust up here soon for a new all-time high and run out to the spring equinox, late March, early April? Is that what's going to happen? I don't know. I would just be guessing. Okay. I'm just laying this out for you because what we can track is the patterns, the fractal patterns that repeat over and over again. And I think the big trigger for the crash, I'm not talking about a correction, the big trigger for The crash, which is how this cycle will end, just like .com, just like GFC, is going to be the spike in unemployment. I don't know what that magic number is. It might be 4.5%, somewhere in that region, getting a full percentage point and then a tenth above the cycle low. That might trigger big money to sell. But one thing you have to remember is parabolic markets do not correct in a mundane, boring, orderly drawdown. Okay. They correct the same way they go up in a parabolic market, and you will have bloodbaths in the market when that actual crash is starting. This is just a little correction right now that I think is going to be finding key support soon. So without further ado, Lee, let's go ahead and look at the charts. Oh, yeah, guys, Lee's back. All right, boys and girls, if you like my market view, you like some of the things that I do, maybe you don't like the things that I do, but you want to be with a fantastic community, check out marketmakers.trade. This is where you can join our Discord, join our website. Fantastic community on the Discord, guys. We have a great staff. This is where you get our extra videos, trade signals, TA. I'm there 5 days a week, most times 6 days a week. I'm there all the time. You want to see individual stocks that you're trading or whatever, I'm happy to create those charts as well as the staff. Okay. So check out marketmakers.trade. Of course, the first week is always free. You can cancel anytime. And if you want to support this channel because you trade anyways, then check out Bitunix to trade all the cryptos. I'll pin that in the YouTube comments. It's also in the video description. And if you want to trade everything, equities, commodities, Forex, cryptos, check out SimpleFX. With our link, you get up to a 50% first-time deposit bonus. That's up to $5,000, ladies and gentlemen, and that's instant. There's no games with that. You deposit 10K, you get 5K to trade with instantly, available to most countries outside of the US. That will be in the YouTube comments as well. Let's go ahead and start the show, Lee. Let's look at the fear and greed. We are in extreme fear. Are you guys scared yet? We're in extreme fear on the CNN indicator here. So when we scroll down, what are they looking at? They're looking at the 125-day moving average. You go down a little bit more, stock price strength based on the NYSE, net new 52-week highs and lows. Look at this. Guys, to me, again, contrarian indicator, we're looking for a bottom, okay? Looking at the stock price breadth, obviously, extreme fear. Looking at put and call options, extreme fear. Market volatility is neutral. I would have thought that would have at least been fearful, but it's neutral. Safe haven demand, difference in 20 days, stock and bond returns, extreme fear. The only thing in greed is junk bonds. That's the only thing in greed, but we have now officially entered extreme fear for the marketplace. Very, very scary. Let's go ahead and move forward. A couple of things to go over here again on the broader economic front. Looking at the United States inflation rate year over year. Why do I want to bring this up? Because right now our inflation is 2.7%. This is official government statistics, okay? This isn't shadow stats. This is official. Going back to the GFC, remember we started cutting rates the same month in September, the same size rate cuts up to January so far, same size rate cuts cut in the same months as we did in the GFC. Bernanke had 2.8% inflation when he started cutting. His inflation, remember, everybody's worried about inflation going up. What happened with Bernanke? Inflation went from 2.8 to 3.5 to 4.3 as he kept cutting up to 5.6 by the summer of 08. So it went up from 2.8 to 5.6 and he kept cutting the whole time. What's Powell doing? Well, they've already broadcast basically that they're pausing. So we're stopping cutting even though every single recessionary indicator has triggered. What does it equal in my mind? Catastrophic failure at the end of the cycle is what this equals in my mind. Bernanke kept cutting. Powell, not going to keep cutting. He's going to keep rates where they are. And as you guys know, this is an elongated cycle because the Fed waited too long to raise rates. Remember, at 9% inflation, It was transitory. They were still buying mortgage-backed securities into spring of the following year because it was transitory. And then they didn't raise rates high enough, fast enough. Everybody talks about the speed that they raise rates. Sure, they raise rates fast from zero, great, but they didn't go high enough because if they did go high enough, you would have got the recession earlier. But now what we've done is we're stranglehold, right? It's like having a midget. Can I say that word, Lee? It's like having a little person on your back strangling you, right? Eventually, you're going to fall over from lack of oxygen, but that's where we are in the market. And that's why the market is behaving the way that it is, because it wasn't enough just to kick the market in the stomach and send it over into a recession. Look at unrate. This is unemployment, civilian unemployment rate. This is the narrative on Bloomberg, on CNBC over and over again. You've heard the tech guys especially talk about this, the soft landing. We're in a soft landing. This is the narrative. But wait, when you look at the 20, what is this, a 20 moving average I have on here? Yeah, the 20 weekly moving average on here, every single time you've gotten above it. And I'm talking about going back all the way, what is this? I think the chart goes back to the 1950s. When you get above it, you keep going above it till you peak out, okay? And in the soft landing that they're referring to, we fell in unemployment by 2%. We didn't go up. We fell in unemployment by 2%. The 3-month 10-year yield, recession trigger, didn't trigger. Unemployment, most important one, recessionary trigger, did not trigger. This had none of the recessionary indicators trigger for this, but yet they say it's the exact same. Whereas we already went up 90 basis points over here on the right. Almost the 1% rule already triggered the SOM rule back in August of 2024, already had the 3-month 10-year recessionary indicator trigger. Every recessionary indicator with 100% accuracy going back to World War II already triggered. Again, this is a interesting cycle to be trading in. 10-year yield, putting pressure on the markets, finally getting a red candle here, taking a breather at 4.78. Okay, cycle high 5%. Look at our indicators here, getting some divergence on our trend on the ADX, and you're getting divergence on the MFI, bearish divergence. So this, by the way, will be catalyst driven. You can say what you want about the chart. I'm telling you right now, if inflation comes in hotter than expected, this thing's shooting up. If inflation comes in lower than expected, it's dropping. I don't care about the pattern. I'm telling you what's going to happen, okay? Based on that CPI catalyst. So that's what you need to pay attention to, is these catalysts in the market, and know where your key supports are and key resistances are, because they're going to be affected by these catalysts. We look at the DXY, we're at 109.83. Again, we have 1618 up here at 111.79. So that's the 1618, the completion of this pattern, the completion of the target. Of course, the cycle high is up here at 114. What's the DXY going to do? Just like I said for the 10-year, guys, watch what happens with the CPI. If it comes in as expected, how will the market react? Hey, yes, inflation is still hotter than we want, but it came in as expected. They're going to sell it that way. But I can tell you right now, if it comes in lower than expected, I would expect weakness in the 10-year, weakness in the dollar. Because why? The Fed can start putting cuts back on the table again. That's how the market will view it. Understand, that's how the market views these things. Looking at the RSP, once again, this is what? This is the equal weight ETF for the S&P 500. I told you we're looking for the bottom, looking for a 3-wave pattern for a lower high or higher high. 618's at 171. Didn't quite get there, almost did. Starting to put in a little baby reversal candle, because markets move to support when they fall. You sold off. You have a key support structure down here of waves of candles up above that. And that's basically where you fell to. Now you're going to try to build a base and then come back up for a lower high or a higher high across the board. Looking at our lunar cycles, today is the day, guys. We have the full moon today. Again, what is the market doing? It put in its low, a new low, and is getting buying pressure back up. FOMC on the 29th for yet another change of a lunar cycle. Will we see this leg? Got to get through CPI, got to get through the inauguration. Will we see this leg, and what will those new targets be based on these new lows in the marketplace? We're going to see that as we look through the charts here. If we look here on the ES, this is the S&P, guys. just to recap, as always, I'd like to give you the recap. There's your high. There's my short. We fell 300 plus points. We started coiling back and forth, ping ponging in the range. We broke out. Here's your shakeout pivot low as of now. We'll see how it closes, but I think this is your shakeout pivot low. You're seeing the buying pressure on the market. And then look at the green box. What's the green box symbolic of? 618, 5,779. Also gives you these highs here from August. Also in the heart of these candles from July. Again, I think this is strong support with these fractal lows in play as well. Okay, I think this is a strong support area. If inflation comes in hot or the market doesn't like how hot the inflation is, watch for 57.79 to get tested. Okay, that's going to be the key area that you want to hold to get this to counter trend rally. What's a counter trend rally mean? What does that even mean? It means you have this move already, right? So you can look at it like this. You have your head and shoulders, obviously, but for illustrative purposes, we waved up to an all-time high. We wave back down. The market moves in 3s and 5s. We wave back down. Counter trend rally is you come back up for that wave C, right at a lower high, or you come up and make a new higher high. Then I think we get the big sell-off. So we're going to look at that target. But understand, guys, if we come down to the 618 at 57.79, let's just measure this for good form. That's a 6.5% retracement. Now, Wall Street, I can tell you this. Again, all of these things come from Dow. Okay, there's all these things about a bear market being 20%, 10% corrections. Everything came from Dow's writings, which is funny because none of them look at technicals at all and understand this type of stuff, but they just look at everything. So if it's 10%, it's a correction or less. That's a 6.5% correction if we did come down to 57.79. So what does that mean from here if it did come down here and hold this and start coming back up? Well, again, the next key pivot point, been over this in many other videos, is late March, early April, the spring equinox. Will we rally into it? Or will we just come up for a slightly higher high, maybe a couple hundred points above the all-time high, and then get that larger 10 to 13% retracement? Again, this is guessing at this point. What we want to do is look at the targets, look at the key support, key resistance levels, and trade accordingly. And I'm looking for a bottom because this is a mundane vanilla correction. This is not a parabolic correction. Remember what Hyman said? Hyman said, the longer things remain stable, the greater the stability during the bull run, the greater the instability when it falls apart. Okay, I'm paraphrasing here, but that's what I'm saying. Parabolic markets don't end like this. They don't just start dripping. And I'm starting to see the thumbnails. Oh my God, this is it. We've been talking about this for 3 years. This is coming back up to counter trend rally for a lower high or a higher high, and then we'll see what happens and trade accordingly. And you guys will get that information here and on the Discord, okay? So let's just get the new target projections because we had the 61.44. We hit it beautifully. Let's get rid of some of this stuff. Let's get rid of these lows, and let's just look at it like this. Now that we have a new low, remember, what is Fibonacci? Because I know somebody's going to say, you're moving the goalpost. You said 62.50. Well, we stretch the market now. You have to understand, what is Fibonacci measuring? It's measuring expansion ratios and contraction ratios. And now we have a deeper low. So if you view it like a slingshot, you're pulling back the rubber band further. You're at the 50% retracement, you pull back the rubber band. Now you're at the 618, you got to pull it back further, which means you can shoot the stone further, okay? So when we look at this now the 1272 becomes 6286 S&P futures. 6286, the 1618 becomes 6416. So this is a big deal because we went from the 6,200, 6,250 and this vacillating candle price action to now 6,286 to 6,416 for that next move, right? For that next move. If we were to do this like a 3-wave pattern, just again for illustrative purposes, if this is the low, we don't know yet because we just made it today, could be coming up to 6,286. Or 6416. Both of these are new all-time highs. And to do that, you got to get above the 786 at 6104. Okay. So that's what you have to do. You have work to do. You got to get above 6041 at the 618 and 6104 here at the 786. I showed you this last time on a smaller time frame, but I think you're putting in the reversal. lunar cycle change. And from a fractal pattern trading perspective, you're already completing a 5-wave corrective move, right? So we have our wave 1. This is a daily. Wave 2, wave 3, wave 4, wave 5, 5-wave fractal at key support. Again, it's just trading's all about confluence, adding all this up. Are you at key support? Yes. What's your market narrative? Orderly decline. I think it's going to bottom. Counter trend rally. We have the resistance levels from Fibonacci, but this is what I think is happening in the key indices, the S&P obviously, and the NASDAQ. Let's look at this zoomed in a little bit. Oh, actually, let's look at the indicators because one more thing I want to look at. So we have a power trend occurring here in the selling on the ADX. MFI is basically in oversold territory, but look what's happening on the market breadth. And this is still crap, don't get me wrong. You're at 20% of the S&Ps above the 20, but what you have is, I mean, you were at 7%, 7.5% just in December, okay? So you have a low, a higher low, a higher low. The market's still selling, but you're getting divergence with the breadth now. That's important because big money spreading their money around and buying things. You're getting their oversold here on the MFI as well. So let's go ahead and look at this on the 8-hour time frame. Same 5-wave move. You can see your support structure here, guys. And when we look at this, go ahead and open up the indicators. Now we look at the ADX in a smaller time frame. You're getting divergence. Your selling waves are getting smaller and smaller. You don't have a power trend here. And then what are you looking at on the MFI? You have bullish divergence on the MFI with higher lows, lower highs in price, lunar cycle change. Let's put all the pieces together. Are you guys picking up what I'm putting down? Because I think we're very close to a bottom. Wednesday, CPI is going to be a big catalyst as to whether or not we test 57.79 or we just start rallying back up again. Look at the NQ, daily time frame. Same thing. We have the daily time frame here. I'm going to get rid of this fib so you can see this. And we're coming down to the 50% retracement at 20,660. Almost got there. 5-wave reversal pattern, right? We have a 5-wave reversal pattern, which may or may not have bottomed because we made that low today, just like the S&P. What's your key support level if CPI upsets the market and people want to sell? Your key support's the 618, 20,237. Current price, NQ, this is NASDAQ futures, 20,882. You didn't even touch the 50% retracement yet. So could it come down lower? Yes, it could. Do I think it's going to collapse? No, I do not. What I think it's going to do is look at all these candles over here. Again, your wave 3 top, all these candles at the 618 providing the support both above it at the 0.5 and actually at the 618. And I think that's your strong level of support here for a potential bottom if the CPI upsets the market. But I think you're going to be coming back up. Once again, counter trend rally. So what would that counter trend rally take us? Well, if this low holds, get rid of this fib. If this low holds, we're looking at the 618 at 21,779, 786 at 22,074, which puts you right back here at the peak too. And of course, if you are expanding, if you're going to make a new all-time high, 22,928, 23,535. Now, this is the daily. As we get more candles, I'll be looking in the 8-hour, the 4-hour, maybe even the 1-hour, looking at other patterns, ABCs, things that present themselves to get some confluence for these targets. But right now, we're still in the bottoming phase, right? Just giving you an idea of where these upside targets could be if we decide we're going to expand in this market. If we do not expand in this market, then you're doing the same thing potentially. And of course, the S&P does it, the NASDAQ will too, but you'd be looking at an ABC for a counter trend rally, right? That's all you would be looking at before what? Before the actual retracement. If this is not the retracement, before the larger retracement. This is going to be a fun year to trade. Guys, I hope everybody ends up having a successful year trading because I think it's going to be a lot of fun. Love to go through this with you guys. This has been quite the journey in my retirement. This is a lot of fun for me to do. Looking at Bitcoin on the 3-day chart, 3 peaks pattern, diamond pattern breakout. By the way, if you're a new sub to the channel, because we got a couple hundred new subs the last couple of videos, shared this trade back in October 2023 on YouTube for the Bitcoin breakout, right? All of our targets Fibonacci on this leg since late 23 up to 24 have hit. You long-term subs know that. And so when we're looking at this, and again, we talked about this being a breakout pattern, an accumulation flagging pattern, and we got up to our targets first at 98K and then at 108K. So what's next for Bitcoin? Well, we put in a new low today. We went down to 89. So because on a 3-day chart, we put in a new low, you got to pull a new fib, right? You got to pull a new fib on the 3-day chart, pull that new fib to the current low. And again, these numbers will change slightly if you get a deeper low. Okay, they're going to keep changing because again, it's ratios, right? So looking at this, what are our targets? We're going to zoom into the daily, of course, but now the 113,640 is still a target. We've had that 113 target from the weekly for a long time, as you guys know. The 1618, however, has changed from 119 to 120,337, and a 200% right here, a doubling of this range from fractal high to fractal low is 127. These are the 3 targets if we're going to make a new all-time high that I'm tracking for Bitcoin. What's the key support level you need to hold? Well, that's easy. You have one candle left really down here for fractal support, or for structure support, I should say, right about at 85 on the daily. It's 85 here. It's 86, 672. You can see that last candle, right? You have your up leg, candle pullback, and then your rollover. CPI comes in hot, guys. Do not be surprised if you see Bitcoin test 85, 86K, right? Because there's not much else between here. That's the level you need to hold because this is an air pocket. You don't have anything until this very tip-toppy high here at 73,843. And if we pull our fib looking at this leg from the deepest level of that flagging pattern, you have the 618 at 71,639. So let's just go over this from the 3-day chart perspective so you guys can see this, right? So 3-day chart perspective. So let's look at this. We have a rally up. What do we have? We have a new low established. Let's say you get a hot CPI, right? Hot CPI, again, I don't know what the number is going to be, but let's just say it comes down to the 86, 85 level, just so we can draw it with a little bit more flair. Now we're at the 86, 85. What does that mean? Does that mean Bitcoin just keeps going down? No, it's going to bottom and it's going to counter trend rally in a 3-wave move. So what is that level going to be? Well, this is when you're looking at the chart, looking at the fibs, right? So you're going to have this ABC. Will we get a counter trend rally right here to a lower high? Looking at the wicks up here, Fibonacci is probably going to line up nicely with this. Or do we break out? Was the CPI good for the markets, or did the markets not care because it came in at expectations and they're rallying up? Well, let's look at this. So we have this level, A, pull your fib down to A. And again, we're going to use the low right now, right? Because that's the actual low, the 89K. And then you could have that 113, 120. 120 sounds nice psychological number, but there's that 104, guys. So if you get a hot CPI, you could push down to that 85K level. And if you come down to that 85, let me just draw this at 85, the fibs. We can look at these numbers. If you come down to that level, 103 is a 786, basically 100K is a 618. That would be your lower high scenario if you were to come down to 85. But from where you are now, this is nothing to be afraid of. I mean, the market's in extreme fear. You haven't broken key support levels yet, and you have key catalysts coming in the market. Now, maybe this catalyst will give us something to really be concerned about. But as of right now, my higher low, if we hold this low, would still be about 104 at the 786. And if we hold this 89K low, 113, 120, 127 to the upside. Looking at this on the daily chart, lunar cycle change today, right? FOMC on the 29th. And you see these numbers represented here again. 108 is your current all-time high at the 1272, 113, 1618, 120, 200%, 127. It's all about holding above 85K on Bitcoin. Hold above 85K, get the market to settle. The market overall, the S&P approaching oversold conditions, very orderly, nice decline. I think you're going to get a counter trend rally, and we're going to be making videos on that counter trend rally and trading the counter trend rally. Look at Solana. We gave you with the 618 last video as well, 175. That's what you hit. You're trying to hold above it. Again, if the market gets more fearful, Look for 151 to hold down here at the 786. 3-day chart, you're just in the same range you've been in, right? You're still just in that coiling range. And at some point, you will counter trend rally for a lower high or a new higher high. Pulling our fib from the all-time high down to the current low, that gives you the 786 at 244. If you take out 264, 290 on Solana, 324 on Solana at the 1618, 360 at the 200%. But got to see what Bitcoin does. Got to see if you can hold your levels. Looking at AIOZ, similar thing here with AIOZ, guys. AIOZ, AI coin, talked about that level of 75 cents with you guys. This is an excellent accumulation range, 58% pump from there. And of course, parabolic decline, right? This is the altcoins. Got all the way down to 77 cents here on AIOZ, right almost close to that 75 cents. But depending on your market view, you're either making a W reversal pattern. People will call this a double bottom, right? That aren't aware about reversal patterns. They'll call it a double bottom, but it's a W reversal pattern. CPI comes in hot. You really want to hold that 75. You have some wicks down here into the high 60s, high to mid 60s, but you want to hold that 75 and not take out below 70. Because if you do, you start looking at 63 cents, 48 cents. And man, that would just that would crush everybody that was accumulating that up there, right? I mean, this is what retail does, right? Charles Dow wrote about this over 100 years ago. They sell, they take profit way too soon and they hold on and sell way too late, right? So that's what they do. They're like, hey, this is coming back up. I'm watching so and so on YouTube. And if this thing comes down to 48 cents and it just starts collapsing, that's what happens. That's not what I'm saying is going to happen. I think this thing's going to hold support, reverse, and go to the upside. But that's what happens in the psychology of this space. DAX, same thing. We had our kill box. When I look at the DAX, I mean, look how beautiful that ended up lining up, right? The DAX hit the kill box. I wonder if anybody traded that based off that kill box. 618, 786. But what you have right now in the 8-hour time frame, it's going to track to the S&P, obviously to the broader US markets. You have a W reversal, right? You got your low, you got your higher low, you have your key support. Look at this. You have your fractals up here. Draw this as a rectangle. You have your fractals right up there. And look where you came to. Right to your fractal support on this pattern, found buying pressure. Let's see if this comes back up. It's going to come back up for a lower high or once again a higher high, but that's what I'm expecting. It's going to follow the US markets. If you come back up and take out 20,542, you want to take out your all-time high, 20,735, and then you're looking at 20,981, 21,293. This will depend, obviously, if the S&P makes a lower high or higher high on its counter trend rally. You guys had some questions in the comments about Chinese stocks. This is HSI. This is what I tracked. The Hang Seng. We had a beautiful 5-wave W fractal that formed here. We have our larger fractal corridor here, or Wyckoff accumulation. You do have some interesting technicals here on the weekly. You have a low, a higher low, a higher low, but you haven't had much. These are weekly candles. I mean, you just haven't had much going on. You're trying to find support from this wave 3 region right here, and you're going to try to want to reverse. But I haven't been sharing this because I don't see a lot on it yet that's interesting to me yet. But the Hang Seng, lots of people think the Chinese economy is not that bad. I think the Chinese economy is very bad. You're getting close back to the '08 GFC levels, '09 GFC levels, but it doesn't matter what I think. It matters what the market thinks and who wants to put money into it. And there's some big money that went into this market, which is why you had this great big move up, but you never change levels. You're still in the same level. Let's see if you build some type of pattern, and then we can talk about it on future videos, either bullish or bearish. Okay. Looking at Tesla. Still holding the lows, guys, 394. Looking for Tesla to come back up. Key resistance 463. Get above 463. Let me make sure that fib's there. Yep, get above 463. Looking at 519, 560 if we can take out 463. Again, the video, we went over this last video. Pivot low, pivot high, sold back off, and now you're doing another shakeout back down in this level. So you've had a lot of range testing here, right? You've had a lot of range testing, but you haven't truly broken down yet. Not truly. We pull a fib here from 4 up. Let's go up to our all-time high, right? Oh, you did make a new all-time high there. It looks like, I mean, a 618's at 120, right? You got to really break down below 120 for this thing to be breaking down. And at that point, if it was, the market is too. But look at Google, sideways, guys. Talked about this, sideways, right at the 1618, 200%, going sideways. Mag 7, all the money's there. Amazon, flagging pattern, okay? It's going to find a base. It's going to try to level up. May come down more to 214 right there, but it's going to try to level back up, re-challenge 231, flagging pattern. Looking at Microsoft, fell out of our channel. Microsoft's one of the duds with Apple, fell out of the channel, but again, it's not breaking down even just a basic TA level, high or lower or low, higher low, yeah, higher low still as of right now, right? Looking at Meta, forming a triangle, had a pump candle in the last video, sold back off, forming a triangle, double top, but overall, you're just coiling. You're coiling in here, and this is going to resolve to the upside or downside. I personally believe it will resolve to the upside. Looking at Apple, rotten Apple. We talked about this concept of where Apple would fall to, right? And again, markets move in threes and they fall to key support when they do fall. So when you look at this, here's your fractal corridor, and you have your wave up, big selling pressure back down into here. Apple's going to counter trend rally for a lower high, right? Or a higher high. And as Fibonacci traders, geometric traders, fractal pattern traders, how do we assess this? With fibs, right? 618, 248, 786, 253 is your two immediate resistance levels above you. And if we look at this from a perspective of this wave, what support level did we come down to? We got through it. We measure it from the deepest level, which is all the way over here. Let's see what this thing shows us on this deep level. I mean, you didn't come down to the 618 from that level, but that's a really deep level. So it's probably going to be 50% on the fib. Let me add that real quick. This video is taking longer than I expected. 50% from your deepest level of retracement. And obviously, I would check all these fractal levels because here you came right to the 618 from this fractal low to that fractal high. So I would look at it because you had coiling, you had higher highs or higher lows in structure, and then your breakout. Point being, Apple's going to counter trend rally at some point when it finds a bottom. That bottom could be lower, down in the low 220s. You're at 233, or it could start holding the base right here in your fractal corridor for a move up. Guys, be sure to like, subscribe, follow me on X. Market Canary is my name on X. And I answer your comments and questions as always here on YouTube. Have a fantastic week, everybody. Look out for that CPI. Hope to see you on the Discord.
Make a wish.